we announced a program last year called the Shareholder Value Creation Plan, where we're selling some assets and then using that capital to buy back shares. And so we're buying back non-traded preferred equity as well as common equity. So that should really improve the net asset value per share because we're trading at a discount, as the whole sector is.
I'm here today with Richard Stockton, President and CEO of Braemar Hotels and Resorts. Richard, how are you today?
Good morning.
Can you describe some of the steps Braemar is taking to support its performance in the near term as well as the long term?
Yeah, sure, Diane. Well, our operations are handled by our managers on the ground. So what we're really focused on is capital allocation and balance sheet management mostly. In the short term, we're benefiting from an interest rate environment with declining rates. So our balance sheet's about 80% floating rate right now. So as interest rates are cut, we're going to continue to generate more free cash flow. On the other hand, in terms of balance sheet management generally, we announced a program last year called the Shareholder Value Creation Plan, where we're selling some assets and then using that capital to buy back shares. And so we're buying back non-traded preferred equity as well as common equity. So that should really improve the net asset value per share because we're trading at a discount, as the whole sector is right now. So that's what we're doing.
And what sort of operating environment do you expect to be facing in 2025?
Industry forecasts for the environment are pretty lackluster, right? RevPAR growth of 1% to 2% with even somewhat higher expenses. We're fortunate in that our portfolio is going to benefit from some of the trends we're seeing in the first quarter. Our group pace is up 40% across the portfolio. Some of that is a benefit from the inauguration in Washington, D.C., for instance. So we're looking forward to that. We're looking forward to a declining interest rate environment, which is going to help us. And then as we look beyond 2025, based on the fact that the supply pipeline of new rooms is less than half of what it's been historically, we're expecting some upward pressure on RevPAR growth. There's just less places to stay. With a growing economy and growing population, that should benefit us.
And is there a project or initiative underway at Braemar that you are particularly excited about for the next year?
There is. At the height of the pandemic, we doubled down and acquired a hotel in Beverly Hills called the Mr. C Hotel. This was in August 2021. And we rebranded that as part of a repositioning of that asset. So we now call it the Cameo Beverly Hills. And the repositioning is a $25 million investment and a conversion to an LXR franchise. So right now, we're preparing for that. We're doing all of the concept design. Last week, I was in Los Angeles and signed off on the model room. It looks absolutely fantastic. So that hotel will reemerge in 2026 as a completely new product. Very excited to see that hit the ground when it opens.